Hello and welcome to Earnings Echo. We put together the most important information about Duolingo.
Today we're dissecting a real Wall Street paradox because you look at the Q4 2025 results and the backward-looking numbers were incredibly robust.
Revenue came in at $282.9 million.
Right, up 35% year over year. Total bookings hit $336.8 million, up 24%, and net income reached a very healthy $42 million.
So a beat on both the top and bottom lines. Yet the stock immediately fell out of bed, down over 20%. The market isn't pricing the past, it's pricing the future. This was clearly a guidance-driven sell-off.
Completely. The forward guidance shattered that price for perfection narrative. Management guided 2026 bookings growth to a range of just 10 to 12%.
Which is a huge shock for investors who are accustomed to growth rates well north of 20%.
It is, and it's not just the top line. They are forecasting significant margin contraction. Adjusted EBITDA margin is guiding down to roughly 25% for 2026.
Dropping from nearly 30% in Q4. Usually, you accept lower margins for higher growth or lower growth for higher margins. Getting hit on both ends. Is the business fundamentally broken, or is this a calculated shift?
It appears to be a deliberate strategic pivot, a risky one, though. CEO Louis van Aan he was very candid on the call. He admitted their previous strategy actually damaged the growth engine.
The aggressive monetization.
Yes. Pushing ads and adding upsell friction caused daily active user growth to decelerate. They are expecting just 20% DAU growth for 2026.
Down from over 40% previously, so the efficiency measures cannibalize the user base. They squeeze the lemon too hard.
Exactly. So the company is pivoting to prioritize user growth over short-term monetization. They plan to invest $50 million in 2026.
And to be clear, this isn't CapEx.
Right. It's effectively foregone bookings revenue. They are removing friction and reducing the ad load to re-accelerate word-of-mouth growth.
It's a reset year. And notably, this coincides with a CFO transition. Gillian Munson is taking the helm and framing 2026 as a foundational year.
That framing is critical for investors. It signals they're fixing the plumbing. And alongside this friction reduction, there is a major shift in their product strategy regarding AI.
The video call feature.
Correct. They are moving conversational AI from the high-tier Max subscription down to the mid-tier Super subscription.
That's an aggressive move to democratize their best tech, trying to drive retention through value rather than forcing upgrades. What was the management tone regarding this investment year?
Confident, but I'd say slightly defensive. The CEO dismissed concerns about AI translation competitors by really leaning into the gaming thesis. Duolingo functions as a hobby.
And the engagement numbers outside of language really support that. Chess hit 7 million DAUs in less than a year.
And they are targeting math to become the best tutor app on the market. They are betting that expanding the ecosystem pays off later.
Did they offer any capital allocation updates to soothe the burn from that stock drop?
They did. They authorized a $400 million share repurchase program.
Managing dilution while signaling they think a 20% sell-off was an overreaction.
Precisely.
So, summarizing the long-term thesis for you today, the narrative has completely shifted from margin expansion to a volume growth play.
That is the core echo here. Duolingo is sacrificing 2026 financials to hit a medium-term target of 100 million daily active users by 2028.
A high-stakes trade-off. The investment case hinges on whether you trust management to re-accelerate the user base after a year of cleaning up the app experience.
If they remove the friction, do those users eventually pay or just enjoy the improved free product? That's the risk.
And finally, the obligatory disclaimer. All content in Earnings Echo is AI-generated information and does not constitute investment advice. Investing involves risks. We assume no liability for your investment decisions. Do your own research before taking action. Numbers checked, portfolio prepped. Catch you again soon.